Is Denver housing unaffordable?
It's unaffordable. It's unaffordable for a lot of people trying to get in, which is why we're having so many conversations right now with wannabe home buyers who are sitting on the sidelines waiting for something to happen. You know, that bubble to burst or interest rates to drop or demand to go away so they can get a good deal, something to make it better. I even had a conversation yesterday that wages would continue to go up, so that would solve it. It's an interesting idea, but one that wouldn't exist because you can't control inflation and have wages go up. The two don't come together. So I started to really think about this. Is Denver unaffordable? And I wanted to put some numbers behind that because we just saw interest rates hit a 23-year high. 4 out of the top 5 indices measuring appreciation, home appreciation, are hitting yet again all-time records. And wage increases, those were supposed to be the solution, those increases have been slowing down since January 2022. So to feel like Denver is unaffordable is real. Mortgage purchase applications just hit a low going back to 1995. So you're not alone. The number one reason when surveyed, millennials said that they weren't buying, younger millennials, was affordability. You're not alone. Nationally, 51% of homeowners today are now paying over $2,000 a month on their mortgage. And $2,000 a month here in Denver, that seems really low. But nationally, you have to think that's high. 25% of people are paying over $3,000 a month. So what are the numbers here? So our median price point in the Denver metro per the last DMAR Market Trends report was $582,000. And this is a combination of attached and detached. So the median home is $582,000. If I put 20% down and I got an interest rate of 7.25%, that mortgage payment is $4,000. It's not 2, which 51% of Americans are paying, and it's not 3, which 25% of Americans are paying. It's 4. So Denver costs more. So what does it take to be able to afford a $4,000 a month mortgage? So the median income in Denver Metro is $78,000. So I want to start there, right? So the median income in Denver Metro is $78,000. The median home, both attached and detached, is $582,000. Assuming I had 20% to put down, whether it's a gift or I saved, I put 20% down, that mortgage payment is $4,000. I have a median income of $78,000. My debt to income ratio on that purchase, putting 20% down with no mortgage insurance, but including taxes and property insurance, is 61%. That's unaffordable. That doesn't work. You can't qualify for a mortgage with a 61% debt to income ratio. So what do you need? If I back that down to a 43% debt to income ratio, I would need an income of $9,302 a month to hit that $4,000 a month mortgage payment at a 43% debt to income ratio. So that $9,300 a month is a $111,000 annual income. So I'd have to make $111,000 annually, or $9,300 a month, or $54 an hour working full time. 2 households, 2 income earners, a 2 income earner household is more likely to get there. The average, interestingly enough, the average income in Denver is just over 100,000. It's very close to 111, which does go to show that the people moving into the Denver metro are continuing to be able to support the homes priced here, continuing to put demand on our homes, increasing the demand on limited supply and pushing those home prices up further. Because the conversation often turns at what point does this stop? Will the Denver home prices stop going up due to affordability? Will it catch up and put pressure downward on home prices? But interestingly enough, when you look at surveys, you see that people are moving towards the flyover states, towards more affordable living. Oklahoma City is number 2, and Cleveland, Ohio is number 1 on some of the most affordable metros to live and purchase a home in. So people will move from, say, California, one of the more expensive, most expensive places, or Denver, and move to some of the flyover states. But they might also move from California to Denver because it is more affordable. Here's the flip side to this, because I can sit here and talk about the fact and even agree all the way into my heart that I want it to be more affordable. But the facts and the numbers show what you need to make in order to purchase a home here. So there are many that will continue to rent and even say, I will choose to rent because it is more affordable. That rent payment is less than the mortgage payment. So I'm out, I'm going to rent. And I get that, and it makes sense. But what you lose is options. When we focus on only the now financially, we lose our ability to future forecast and vision and set a plan for the future, providing more options when we need it most. Those options in retirement, those options when we want to pay for our kids' college, those options when we want to pay for weddings and family trips and visits to our grandchildren, those options when we have to pay for medical care or in-home care, options that provide us the sustainability of a lifestyle. Those options don't come when I make a decision today based solely on the fact that the median priced home is going to cost me $4,000 a month, and I think that that's unaffordable, or I think it's too much. Because if you get to a position where you can afford that median priced home, that $582,000 home in 10 years at an average of 3.6% appreciation annually, which that is the national historic appreciation, including Oklahoma City and Cleveland, Ohio. Denver appreciates higher. That home, that $582,000 home in 10 years will be worth $830,000. And you, in the meantime, will have been paying down the principal. Maybe you turned it into a rental, rented out some of the rooms. Maybe you converted the basement into a mother-in-law suite and rented that out. Maybe you built an auxiliary dwelling unit in the backyard, or maybe you even rented out the garage to somebody else because you didn't need the extra space. The options exist when you own a home. And now you've built almost $300,000 in equity in addition to the principal reduction. And now I have options. So it feels limiting. It feels like you can't move forward. It feels like it's a non-starter. The answer is no. But what if I asked you to rethink your answer and simply said, not no, but maybe not yet? Because if it's not today, I want you to please consider converting your no into a not yet, and then opening up the door to options. Because if it's not yet, what can I do today that allows me to consider building options for tomorrow? Nicole Rueth with the Rueth team. I hope you guys are having a fabulous day. I hope you'll give me a call. Let's sit down and make that plan together. Because I'm not going to pressure you into today, but I do want you to know when your time is right.